This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello everyone, and very much welcome to Breaking Banks Europe, the podcast that will take you through the complete fintech landscape and all the interesting stuff that's going on. Today we're talking episode 254, disruption stories, and we're going to listen to what's happening in the mortgage market. Very interesting field, lots going on there, and fortunately we've got our expert ready for you to pick his brain and hopefully inspire you with some great insights on the mortgage market and what's going on across Europe. I've got with me Geert Van Kerckhoven. He's the co-founder and CEO of Oper. Geert, very much welcome.
Hey, Don. Very nice to be here. Thank you for having us.
Yeah, I think great that you're here. You're based out of Belgium, right?
Yep. I'm based in Belgium, but traveling a lot around Europe. So you can shoot me any question about mortgages in any European country, I guess.
Well, I'm definitely going to try and do that, but we only got half an hour, so I have to be quick. No, but let's get started first with your background. I think what are you exactly doing with Oper? I think you play an important role as a backbone for mortgage providers, but how does that work?
100%. So we started building Oper 5.5 years ago, and we had really a clear mission to help lenders on the digitization of their mortgage journey. Meaning that we have developed a software as a service platform that basically helps lenders on their journey from the first contact up until all the way signing on the customer contract. And we basically do that with a full user interface stack that allows lenders to self-serve their borrowers, but we also developed all the nitty-gritty modules to help loan advisors advise better products, and ultimately back offices and mid offices to take better credit decisionings. Our mission is very easy. It is about reducing borrower anxiety and also sometimes loan advisor anxiety. Mm-hmm. Yeah. And also we want to reduce as much paper and manual tasks as there are in the process still today. And we do that at a European scale.
Okay, really nice. So, and I think what was the challenge that you actually started with to solve first? What was sort of the first itch that got you going in this direction?
Oh, the first itch. I mean, I've been in this industry I kind of like gradually went by accident, basically got into, I just wanted to work for a startup 15 years ago. And I found a startup that was building core infrastructure for lending. So I kind of accidentally bumped into what would become my passion. I had a few evolutions. I, in the end, built software, built a technology product. I then worked on management consulting with banks on mortgage and lending transformations. And then ultimately worked at banks myself, bringing technology to life. Mm-hmm. 5.5 years ago, or I would say rather 6 years ago, when I took the entrepreneurial journey, I knew that post-financial crisis, Europe, EU launched a lot of regulations. And we really saw it as a momentum to look at Europe as a harmonized market. So for the first time, we're thinking like, hey, if we want to solve the lender problem, we just don't have to solve it for banks in the Netherlands or Germany. We can solve it for EU as a whole. Yeah. And we just saw that everybody was transforming digitally. Everybody was reducing their branch and physical footprint. But the problem with a mortgage is it's such a high trust. It's like the biggest transaction you do as a borrower. It's really difficult to just put online as a process, just transform to an online process. And so we saw there was a need. We thought we had a solution and we had scale to deploy it. And that was those 3 pillars were the genesis of starting to build Oper.
Okay, cool. So if you talk about the trust factor of the end users, right, the consumers, do you see that's because you say it's not really an online product, but I think actually quite some consumers would be quite satisfied if they would just be able to tick some boxes and be able to take out a mortgage.
this is the biggest thinking. I see this thing is the biggest thing I changed my mind about in the last 5.5 years on. I when I started Oper, I also had to believe, like back in the days when we started, 5% of European mortgage would happen fully online, execution only. And today, if you would look at European data, you would still be at 6 to 7%. Why is that? I think a lot. So what we learned from our own data and our own clients is that a lot of clients want to take all the transactional tasks digitally online, like uploading documents, knowing where your application sits, signing documents, doing a first simulation, maybe playing a bit around with properties and saying, can I afford this property? But when you really want to know about, like, hey, will this project be feasible for me? What we see is that people still want to talk to somebody. And still, like, first-time home buyers, but also second-time home buyers, at a certain point, they want a human in the loop. And we've learned that as soon as we build our advisory capability to do like virtual advisory, where we would basically ensure loan advisors they could talk to somebody, we would also in our product see conversion rates go really up. So I feel that human in the loop is important. Of course, when we're talking about refinancings or we're talking about mortgage extensions or top-ups, that's a completely different process. That's something you can do fully online, like in the e-banking. We support that. But as soon as you go through a second mortgage, or a first, you want to talk to somebody. And that's I think, if you embed that step in a digital process, then it can work. But like filling in 5 forms online and you sign the document without ever talking to somebody, I don't feel that's going to fly.
Yeah, I think I can imagine that. I think it has a lot to do with fiscal complexity as well. I think there's of course, because the product by itself isn't necessarily that complex, but indeed the implications might be.
Yeah, I mean, just a stupid anecdote. I mean, from a European country. I mean, this could be almost anyone. It's like, I'm going to do my second mortgage. I bought an apartment. I had a bit of luck. I could buy a small studio, and now I found the lady of my dreams. I'm going to buy a house with her. You go to the bank. What do? Do you sell the house? Do you sell the studio? Is the studio already sold? You might maybe rent it out. Oh yeah, by the way, the house that you're going to buy is a bit more of an older house, and it has single glazed windows. So maybe you need to renovate it. So maybe the state will give you a subsidy to subsidize the renovation. Yep. Like all these pillars already end up in a financial plan that even if you have 7 PhD and you are eligible for a Nobel Prize, you still need to think it through of what makes most sense. And that's where a loan advisor still has a crucial role.
Yeah, I think especially trying to find your way through the maze of all the regulations and subsidies and all the different opportunities that are there, I think it's quite a tough one. I totally agree. Yeah. And so, do you actually see that quite differently across different countries? Or do you see that it's quite uniform these days? I think you said you jumped on this European harmonization opportunity, right?
Yeah.
Are we getting there, or are we still a bit behind?
I think processes. I think if you look at the process, so in 2014, Europe issued the Mortgage Credit Directive. It's basically the small niece of the PSD2, which is in open banking, which is discussed a lot. That harmonized a lot, like in terms of how does the mortgage process need to look like, which data points do you need to ask, which documents do you need to issue to a client, how do you communicate about mortgage products. So that actually means that today, if you would look at a mortgage process in Romania and then you would look back to a mortgage process in France, there wouldn't be too much differences. Like it's always the same steps, because that I think Europe has interpreted quite nicely. I think what still differs a lot around in countries, but also that is changing, I feel, is distribution. Like typically Netherlands, UK are very broker, intermediary dominated. While, for example, in France, a lot still happens out of branches. Or Belgium, a lot of still happens out of banks, branches. Germany is now 50-50. So that's still like distribution channel. And then the importance of, let's say, mortgage intermediaries is something that's still very, very different. I mean, for example, in Denmark, they don't know mortgage brokers, doesn't exist. So that still sometimes makes talking to different countries a bit peculiar.
Yeah, no, I can imagine. And do you also see the same thing happening in the lender market? So I think basically sort of your Oper clients, are they generally, you see that a lot of the bigger banks, at least I see it, have withdrawn a bit from the mortgage market, and you see more alternative players or specialized players coming in, or for example insurance companies that also are setting up their banking branches. for them, this is a really interesting proposition, I can imagine.
Yeah, so that's especially what you're referring to really happened, I think, the last 5-6 years, but even more in the Netherlands, of course, that you saw a lot of non-bank lending. Also, of course, there you had the NHG scheme, which made it very attractive to invest in mortgages. I think I see that across Europe, that I mean, especially when interest rates were low, insurers were very, like, it's a very nice long-term investment to still get some kind of yield. So I think insurers also, for example, in Switzerland, they just created the broker market. So I think across countries, we did see that happening. Today, with, let's say, interest rates are a bit higher, I think banks just do their duties, and I think banks are picking up again in terms of pace. Insurers, I think, is a bit less so. But I think overall that's still very, very, I think today I see it's still quite bank dominant outside of the broker dominated markets. And of course, for insurers it's also interesting because of the cross sell aspect, because you can cross sell living, life insurance and home insurance.
Exactly. No, I think especially there this especially sort of bank insurance kind of product mix, which has been out of fashion for a while. I think it's been picking up again over the recent years.
Yeah. I'm Belgian, so I know the bank insurance model very good. And at the moment when here in Belgium, banks were offering you like a 0.5% 20-year fixed mortgage, but then your life insurance was like 20 times more expensive than another insurer. We were very good at that here.
Yeah. Not exactly the right deal you were looking for, but
but you had a very low interest rate.
Yeah, exactly. This is quite interesting indeed. So what is your feeling now? I think the harmonization, I think, was a really interesting one from a Dutch perspective. It was a bit. It also had some downsides. We actually had, for example, had to go from digital valuation reports to manual valuation reports as part of this harmonization, which of course we saw a bit as a sort of a reverse innovation. But overall, I think it's been quite positive across the board that we made that move forward. Is there anything that we still need to do there? Well, are there still things that you say like, okay, this is across countries, this is what we run into that needs to be harmonized or should be better standardized, for example?
Yeah, you gave the example actually already. I think data. Of course, you have now open finance, but I think there are two things which I think are still incredible patchwork. The first one is obviously what is allowed in terms of, let's say, API usage, meaning electronic property valuation. Like some countries allow electronic property, like allow you to just, ping an API and we get a value back. Other countries still think there's a manual appraisal that needs to happen. Especially in some Central Eastern European countries, a client still needs to physically go to a bank to authenticate. So you don't have KYC processes, dynamic KYC processes. It's funny because I'm not going to name the countries, but one Central European country, you basically have fully digitized KYC, and then you travel 50 kilometers and you still need to go physically into a branch. There's no harmonization on that, and there's a lot of local regulation. And and that also leads to the fact, and that's for us sometimes an issue, is that we might work in 6 countries, but we really need to, for every country, we have an Excel sheet basically that says that's the KYC provider for that country, that's the signature provider for that country. And I think if we start building European regulations around that, and it's coming, but it's going slowly, you will also see more tech companies that will scale, and that will be more adopted. And then I think we'll see, and that will also allow us to reduce the paper the papers or the documents in the processes, and will also create ultimately better experiences and more efficient experiences for banks.
No, especially I think that I'm really looking forward to that as well. If actually you would need to have a proper digital identity which is easily usable, including different attributes that belong to that, like what's my salary, or what's my estate or worth, or what's my tax return that I filled, that I could actually use it immediately, the right original data to apply for these kind of applications.
Yeah, 100%. And a lot of that sits in databases. And what happens today is the data sits in the database, but people print a PDF and then give it to their bank. And I think that's a huge redundancy we can cut in the years to come.
And also not really secure, because we're not really talking about data minimalization here, right? It's rather data maximization by keeping copies of passports and stuff, along with all kinds of salary slips and other quite important information.
100%.
And so, so I think it's still so here and there the processes are still a bit clunky. One of the things, of course, that people always want to know is how fast does it can you actually get a mortgage? I know that the range can be quite wide, but what's your experience? Do we see it actually getting shorter to, let's say, turnaround time of a week, or is that still a bit far from where we currently stand?
You mean time to yes, or let's say time to cash?
Well, I would love to say time to cash, but let's take them both one step at a time.
I think time to yes really depends on what you. I mean, that's always the answer, right? It depends, but I think today we have clients where we basically can give a time to yes in 5 to 10 minutes, and that's basically dependent on how fast the borrower can introduce details. Mm-hmm. So it's basically we can basically pre-approve a client based on a minimal set of data points. So that's. Okay. That's pretty fast. Let's say time to underwriting, when you still need to do, because that's also something that there's still a bit lack of regulations. Like if you still cannot automatically underwrite somebody, might be a day, like 24 hours to get to a manual check. Mm-hmm. I feel one of the things we have hanging here at our wall in the office is that we're real believers of real-time underwriting. And real-time underwriting for me means we have the client profiles already loaded in the system. We know the parameters, we know the risk policy. And basically, if you say, hey, I'm interested in this property, we basically say, if the property is 100,000 or 200,000, we basically back you up until 160 based on all the data we have from you. So, those models we have running, those models is technically, that's not really challenging. It's more about regulatory framework combined with risk appetite sometimes. Yeah.
Do you see that? Because I think indeed that's one of the big demands usually for people that want to go and buy a house, is that they actually have a good good prediction of their capabilities to obtain a mortgage. Is that still? I know that also sometimes that, for example, financial market authorities are not that keen to actually give people a sort of a cap, like a maximum credit limit. Well, I think it's actually what people want, right? That they would want to know what they're up to and what their possibilities are.
Yep, that's how it works in a few European markets, and also beyond that, you basically get this certificate that you're basically pre-approved up to a certain market amount. The reason that, of course, a lot of regulators don't really like it is because the property is unknown, and of course, regulators also try to make sure that we're not getting like a heated housing market or overvalued properties. And I feel again that's something that's also the reason, of course, that I'm working day in, day out at Oper on this topic, right? But I feel that if you have a digital property valuation and you have a few amazing companies there getting really good passports for buildings, you can also very much automate that, where you basically say, look, I walk into a property, I say which property it is, we load the passport of the property, and we basically say, we as bank back you up until this income threshold, this loan amount, based upon the property you just gave us.
Yeah, I think it would be really, really worthwhile, because I think, but I'm also interested to pick your brain on that, right? So I think it's you basically see, if you look at the development of the housing market, that prices have been evolving with the amount of credit that has been made available for the market. Mm-hmm. So generally you saw, like, for example, I'm particularly familiar with the Dutch market, where, for example, we went from a single income mortgage to a 1.5 income mortgage to a 2 full income mortgage possibilities. And you basically see that back in the valuation of the housing prices. So basically, which means you actually have to be a double income family to actually afford the average houses now, because that's just what became the standard. So it's really hard to say that, you basically know that with the amount of mortgage you make available, you actually inflate housing prices at the same time as well. It's a really challenging game to play, right? How to set that up. I'm not sure if you have any smart ideas there of course, it's not really your job, but
if you work on the technology side, you start learning more and more about the importance of mortgages in a macroeconomical environment. I'm not going to bore you with that for this, but I think more and more started seeing the value of it. But what is interesting is we had an inflationary environment. We wanted to fight inflation because housing prices were going through the roof, building materials were going through the roof, so we increased interest rates. But if you now see the latest European data, what you actually see across Europe is that interest rates have increased, mortgage volumes have dropped, but have now people don't want to wait anymore, have silently gone up again. Mm-hmm. But house prices, what we wanted was that house prices would go down by 3 to 5%, so they would normalize. What you see is that now energy efficient housing is still going through the roof, and normal housing is still increasing by 1 to 3%. It's very different across countries, but if you take the average, it still went up 3%. So housing still is a very scarce asset. And cooling down house prices is going to take a lot more than just an interest rate increase. So my prediction, and that's going to be very challenging for the future, but my prediction is really that buying a house, getting a mortgage is becoming more and more difficult. And lenders are going to have to be and regulators are going to have to be very creative about the products they're going to offer in order to make it still accessible to young families.
Yeah, well, at the same time, of course, in the end, if no one can afford a house, there's no buyers, right? There's no demand, so the price should go down generally.
Yeah, but then you have, for example, also in the Netherlands, then you have just commercial buy-to-let companies that just buy the properties and lend and put them on the rental market.
Well, that market has recently been killed, but with new regulation that came up. But I agree. So actually, there's of course multiple balances that you have to weigh on. Just like, for example, also the amount of expats in a country, also basically that play by different rules because they have a different mortgage background set than local inhabitants, for example. This is also where some of the immigration debates are coming from, right? That basically people with a different background and a different type of income actually aren't fair players on the mortgage market, for example, or the rental market. Makes quite difficult, and I think it puts a bit of pressure as well on because people see this as a real big problem. I'm afraid that actually saying no to immigrants is not really the solution to the problem because we just have too few houses for the number of people that we have in the country.
And we have really a dichotomy right now, I think, in Europe, is that is on one side, like we want to make housing affordable. We want to make sure young families can invest because it's one of the best assets to have, like, buying your own house, paying it down, and you're creating wealth. But on the other hand, what we also have is we have the Green Deal, and we have all these energy efficient and energy efficiency targets. So basically, we're also forcing people to say, hey, if you buy a new property and it's not energy efficient or it's like an old house, we're going to put a lot of conditions on you to renovate. The only thing is that just pushes the house price up. And it's really, for some families, not affordable. So we're having these two things, and we're pricing certain projects out of the market. And I think solving for that challenge is going to be on a macro level it's gonna be a very big paradox, I think, in the next 5 years. It already is, actually.
No, it doesn't have a very easy fix, right? So I do understand that that's quite a big challenge. So and how do you see just to maybe take things to a bit more easy territory? So if you look across your experiences now across the different markets, right? You've already said that despite the harmonization, there's still quite some differences. What are sort of your is there anything funny that you sort of discovered in a certain country that they just do things completely differently with regard to the way that they perceive mortgages or the way that they apply for it?
Yeah, I don't know if we're going to go in lighter territory, but we serve a very large client in Hungary, but we would really love to work with them. And I think the Hungarian regulator, for me, is like the opposite of some other European regulators in the sense that they are going incredibly fast, and sometimes they're pushing. So they decided to basically, and I really think this is super cool, by the way, they pushed for what they call the paperless mortgage. So they basically said to all the banks, as of in the next 3 months or the next 6 months, I forgot what the exact duration was. You guys, 20% of your production needs to be fully automatically decided without using paper because we want to be a digital nation. And so then banks have 6 months to figure it out, which I think is pretty cool. But they also have a lot of subsidy schemes. And I think the product that we needed to build in Oper or configure in Oper, which was the trickiest, is the baby expectation loan. That's the literal translation from Hungarian.
Okay,
it's basically a reduction that the state gives you on your mortgage loan if you promise to build a family and make a baby. But it basically, and that's the funny anecdote, it leads to our data model. Our data model is now a extra variable, which is called age of the fetus. Because people can come and say, yeah, we're expecting. So the baby's going to come in 6 months, and they need to register that because they need to report that to the state in order to get the grant. But we spend a lot of time in the first year to build the European standard data model. And I was so sure that we had it. So like changing the data model means I need to decide together with basically the management team that we changed the data model. And then suddenly our team came and they said, hey, we have something here. Age of the fetus.
That's quite funny. And so you shouldn't accidentally ask for that, I think, in other countries. That might be inappropriate, right? So
that data field is hidden in other countries. Yeah.
It's very interesting. Yeah. Oh, but it's funny indeed to hear. I mean, I think generally these days we get, of course, usually reports about Orban's behavior in the media on the western side of Europe. But I think it's quite interesting to see indeed that they also make quite good progress on digitization there.
Yeah. I think about e-signing, KYC. I think their National Bank of Hungary is really. I can only say that everything I see coming back, I'm sometimes like, bah. And also it moves fast. So I think they are really becoming one of the front runners when it comes to allowing banks to be digital. So I think that's really good.
Yeah. And so do you similarly also see sort of a more counter, let's say, hang towards the traditional way of working in other countries where you see that it's really hard to actually make them go through the digitization process?
I think what and then not to name or shame countries, but as you also mentioned in the past, is that the fact that through European regulations, we suddenly had to go back from electronic valuation, property valuations to physical expertises. And that's especially in the Western European countries, like suddenly it was like, oh, it's not allowed. We need to do manual appraisals again. Okay, we're not going to fight it. We're just going to implement it. That has a super big regression impact on your mortgage process. And sometimes it's the same with also KYC, where I really have the feeling then, we tried something which is still identity, it didn't fully work or it didn't get fully adapted. So we're going to go back to asking people to put a scan of their identity card. So it's always about data. I mean, today, thanks to AI, we can do a lot with documents. So it's very nice. But again, it's absurd that we're investing so much money in reading OCR technology, optical characteristic technology, that we are investing so much in fraud prevention technologies to make sure that nothing is tampered with, while the data is just in a database, which we can get authenticated over an API connection. Anyway.
Yeah, I think it's quite interesting and still a challenge there. I think it's a nice bridge there that you make as well towards, I think, some of the regulations that is coming up about operational resilience, right? Which I think you're also in the middle of because you're a key component of some core financial processes. So DORA is probably also high on your agenda. Do you see that that's also one of the tools that we could use to actually also think smarter about these kind of processes?
Yeah, I mean, absolutely. I think for me personally, every regulation that has come from that direction, if it's now DORA or it's the AI Act, I think, or even the EBA's outsourcing guidelines, I think we can always use it as an opportunity. But often it is like it comes on top of it. It is not really a priority. So you see a lot of our clients sometimes being like saying, "Hey, we just want to be compliant." And that's just, we're going to put a little bit of red tape on top of it. So that's how we're going to do it. We're going to reverse some stuff. And that doesn't always benefit a digital agenda. But that's something we try to do because we're SaaS. We try to then look at those guidelines, see, how can we turn that into a lever, into an advantage, and then try to bring that into our clients.
Yeah, I think it's good as you keep on pushing that agenda. I think I see also too often that people are doing digitization from a cost perspective. And indeed, just looking at the regulations compliance also just to comply, while you should always start with your customer and your end goals in mind and then work your way backwards, right? I think that's also, in that sense, also there's a lot of opportunities in these regulations also with DORA. I mean, how could you actually create more value by looking critically at your operational resilience and what it means for your customer? I
Yeah,
think that's an
100%.
opportunity you should definitely embrace. Yeah.
100%.
Hey, and so what's what's on your roadmap going forward, right? So I think definitely I'd like to also explore a little bit further beyond the mortgage market if we look at sort of the way people finance their home. But what's currently on your roadmap now? Is it more like a country by country expansion, or are you also looking to expand products or distribution models, or what's the road forward?
Well, first, I mean, strategically, we are, I think, ready to operate in the EU 27 plus some other countries. So I think that's something we're actively working on with our go-to-market teams. I mean, from a product point of view, there, I think we're pretty well set up. I think we really built some country-specific layer that allows us to access countries very quickly. So I think that on our roadmap, what we are currently working on is really getting to that real-time underwriting and making sure that all the modules are there. So that means connecting to the rate data providers, but also developing a lot of intelligence around how do we process documents, how do we help loan advisors to come to the most suitable product, up until like we today have a assistant, some sort of a co-pilot that runs alongside of the underwriting engine that basically writes a underwriting report for loan files that cannot be automatically decided. So I think we're building a lot on that on our AI roadmap there. And I said I'm super proud that we have LLMs running live with banks today in Europe, fully compliant. I think the compliant part is the important part here. We're not in the out of the sandbox, so live mortgages. So I'm super proud with that. So that's for me short midterm what we will work on more. Longer term, is really about how can we do more? How can we help banks launch more innovative products around acquiring property? So that's a bit more on our longer term vision. I mean, there's a lot to do, as I already said, from a macro point of view. Buying a property is becoming more hard. How can we help in that range? That's a bit more on the long term roadmap right now.
Okay. Yeah, I think that's really interesting. I think there's I see some interesting explorations here and there about fractional ownership, equity-based financing, or more mezzanine or financing, or indeed sort of a more family estate-based financing, for example. I think there's a lot to explore there, but of course, generally quite tax dependent and other regulations dependent.
Yeah, but it's really, and I really love to look at it like that. You can say it's about buying a house, etc. But actually, it is really a long-term journey, because as soon as you're 18, 19 years old, you basically want to save, for one day, you want to just save money. And already a long 100 years ago, we started in Germany with the Bauspar products, the home savings. I mean, saving money for your down payment effectively. I think that's actually an industry we kind of neglected a little bit. Like, people still do it, but it's like, I think there is a lot to do. Maybe then also to evolve to rent to buy. You rent your first house, but you can also buy it and combine those products. Then you can already start paying down your mortgage. But today, I also feel real estate becomes a living object, because we will do a lot of renovation side, a lot of energy efficiency. We might lease a battery to charge our car or to give power back to our car. We might lease solar panels. So I feel also during your mortgage, your house will become more of an asset you want to maintain to make it efficient. So that's, I think, today still in a lot of European countries, if you want to lend money for a renovation, it's frowned upon. It's like, why don't you have the money yourself? But I feel that's going to change, because your energy costs will go down. It's not about building a pool. It's about making the house better.
Yeah.
And then at the end, and that's something, for example, that's forbidden in Belgium, but becoming quite hot in the UK and in France, is the reverse mortgage. Like, I paid down my house. My house is now worth, let's say, 800K. I'm retiring. It's just, taking a reverse mortgage. So you basically have a better thing on your retirement. Okay, then culturally, the inheritance won't go to your kids because you might have lost a few, might have used the money already for consumption. But I feel in an aging society, that's going to be a default product we will need in the market in order to keep people's people, should I say, it's financially liquid during their retirement.
Exactly. Yeah, no, I totally agree. I think also these kind of products can be really helpful, especially now with this indeed aging population, and in some cases, some real pension gaps that need to be filled. Yeah.
So I think that's like, for me, I see that as on a timeline. I feel like that, and that's all the journeys, and that basically can translate to hundreds of financial products you can help to help borrowers in succeeding throughout that journey. And that's where I see the future for Oper as a technology provider, in enabling those products from somebody being 1 month old to somebody basically being 100 years old.
Sounds good. I think there's a lot of work to be done also on financial education still, but I think it's great that you're there to also guide the clients and, of course, the financial service providers that are helping out in this market to guide them in a fully digital way to serve their customers. So I think we have to wrap it up here. Geert, thank you very much for sharing your insights. It's been really valuable, I think, to learn much more about the European mortgage market and of course, the future that we're heading to with a lot of opportunities there. So thanks a lot, and it's been great that you've been building so far with Oper. So we'll keep track of what's going on there. All the listeners, thank you very much for joining in and listening to this episode 254 of Breaking Banks Europe, the disruption stories. Thanks again, Geert from Oper, and looking forward to see you again next time.
Thank you so much. It was nice to be here.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.